Brace the rudders! Raise the sails! Raise the sails!
Captain, an unidentified ship is approaching. Over.
Roger. Wait, is that an enterprise sales solution?
Reach sales professionals, not professional sailors. With LinkedIn ads, you can target the right people by industry, job title, and more. We'll even give you a $100 credit on your next campaign. Get started today at linkedin.com/results. Terms and conditions apply.
Reality radio for a really great future. We're talking real money.
Well, welcome to Talking Real Money, the radio show that later becomes a podcast. Hi, everyone. I'm Tom Cock. Don McDonald is off this week doing, what we should all do, and that is visiting his mother. So, Don, good job doing that. We miss you, but we'll look forward to having you back for the holiday weekend, which is coming up fast, the end of summer. Oh, sad. But you're out there trying to figure out what to do with your money, and our job is to help you do better with it. So let me give you the telephone number, 855-935-TALK. That's 855-935-8255. Anything financial related. And boy, there's been a lot of discussion this week, whether it's the U.S. government investing in Intel, whether it's the market's huge jump on Friday, a lot of stories, and of course, maybe they're personal. Maybe they're about your situation. That's one thing I find fascinating when I get to talk to you and to our clients. So last Saturday is one of my favorite days of the year. No, it wasn't Christmas. It's not my birthday. Which, you get older and birthdays, you want to have people notice them, but you don't want to make too big a deal. Cause they're like, wow, people really live that long? No, this was our annual client event. Now we have other times, obviously, we see our clients regularly, in the office, on Zoom, phone calls, et cetera, talk to them a lot. But once a year, we get together, actually more like twice, because we do retire meet, every year too. And we see a lot of clients there, which, by the way, here's sneak peek. That's already scheduled for March 7th, 2026, includes a very exciting speaker. But last Saturday was our client event. So we had about 130 people there. And back in the olden days, not that long ago, we were lucky to get 25 or 30. So thank you to all of our clients for your loyalty, for believing in us. There's a lot of people that they could hire. There's a lot of people in this business, whether it's brokerages or insurance people, there's a ton of people. So the fact that you've chosen us, I'm grateful, truly. But got together with them last week, and it's a little nerve-wracking because, everybody wants to talk at least for a few minutes to me, which is great. I love that. But here's the part that I find fascinating. This is a financial company, right? The company that I'm the regional director for, called Appella Wealth. And you think finances would be at the top of the list they'd want to talk to me about. But here are the top 3 topics. I wrote it down after I came home last Saturday. Number 1 topic was travel. Number 2 topic was kids and grandkids. And number 3 topic was the weather. Well, I guess because that's Seattle, and it was marginal, but it was, I think a year ago we had real heat, but this year it was kind of partly cloudy and like barely 70 degrees. So, but what about money? Why weren't anybody, what about the market? What am I going to do? And so I talked to a bunch of people early in the week about that, like kind of, why aren't our clients asking us about money? And the thing is, the reason why is because they don't really think that much about money anymore. Number 1, they've got somebody managing the money. Number 2, we've told them over and over again, don't pay that close attention to all this, because the people that do end up with less. And apparently they're taking our advice. Now, when I got up and did my little chat, I jokingly told people I was only going to go for 2.5 or 3 hours. But I think I went for whopping 6 or 7 minutes. I spent a little time talking about everything we together as investors have been through this year, because April wasn't that long ago, and it was tough, right? With the tariffs and markets pretty much in turmoil there for a bit. We've recovered. Stocks have recovered nicely. And bonds, actually, I just looked at the bond fund that I think is a good benchmark. That's by dimensional funds. It's up 5%. So things have come back a lot. I spent a little time talking about that. I spent a little time talking about how we help our clients which includes, of course, financial planning. Yeah. Includes taxes, because taxes are, you got a partner. Every dollar you got invested, that's the U.S. government or a state government in some cases. Portfolio design, of course, insurance, all the things that we do for our clients. But at the end of the day, I tried to come up with a unique message about how our job is to allow you not to think about money on a regular basis, to think about travel, kids, grandkids, well, maybe not the weather, but those things that are really important in your life, because money is important, but we don't want you to worry about it. We don't want you to think about it. And by the way, same thing holds true to you listening to the program today that are not our clients. There's many of you. And by the way, there's many people listening who are, because they told me, oh, I heard the show today and this and this. So yeah, you got to find a way to put money in its place. And that's part of our overall message is you can't live without it, but you don't want to make it the thing you get up every day and worry about. And I've been there in my life where it's been central. Hate it. Glad it's not anymore. Glad for our clients. Apparently it's not anymore. They're not worried about how much little more money I'm going to make this month or less, et cetera, or what the market's going to do, or what tariffs are going to mean, or what about interest rates, or all the things that are out, or what about the U.S. government's investment in Intel, all those things that are sort of on the money agenda, but really as investors, you should not be worried about. And so this hour, I'll spend a little more time talking about how you do this yourself if you don't want to hire an advisor, because an advisor does all that. They do all the work, as I said, with the planning, the taxes, the portfolio design, the rebalancing, the RMDs or income, all that stuff is done for you so that you don't have to sit around and fret about all of it. But if you're going to do it on your own, we'll take some time and talk a little bit about how you can do that as well. So, this show really is about you. You know that because you've listened, and you know that your calls take center stage every time we do this, and we're glad to do it. We enjoy it. And the number to do that is 855-935-TALK, 855-935-8255. So, he's been patiently waiting, calling from Minnesota. And, Bill, thank you for being part of the program. How can we help you today?
Hi, Tom. I love your show, guys. I'm 70. My wife is 64, and we're on Social Security. But we have about $700,000 in Roth and regular IRAs, and we have $220,000 that are right.
I'm having trouble there a little bit, Bill. I heard the $700,000 in Roths and IRAs, but then out of that, you said $200,000 is in something. I couldn't hear that.
CDs.
Okay.
That's matured.
Yep.
It's maturing this month.
Yep.
We have about 40% in bonds, including that, out of our 700.
Yep. Yeah, Bill. What's your question? We're having trouble hearing you. You're dropping quite a bit.
200,000 CDs. If we should renew that at 4% or put it in a bond fund or something.
Well, okay. So thank you. Great call. Great question. The answer is it depends. So if you had 700 plus 200, so I'm taking it that your portfolio is somewhere around 900,000. Then I'd be looking at, okay, how does this fit into my financial plan? What sort of rate of return do I need on this money? How soon until I need this money? And how much volatility am I willing to accept to make that? So let's just play devil's advocate just for a moment here and say out of the 900, you decided, well, I'll be, kind of middle of the road, 60% in stocks, 40% in bonds. That means that you'd have a little over $500,000, right, in stocks, and then the rest would be in bonds. The reality, so that would mean that 200 probably would go to a bond fund, as you mentioned. The reality with bond funds worth of CDs. Now, we've had this unusual period really since 2022 where it's been more profitable to be in certificates of deposit than to be in bond funds, because bond funds, frankly, have stunk since closer to 2020. I did just mention the dimensional fund that I use as kind of a benchmark to see what's going on with government bonds. It's up 5% year to date through yesterday. That is a good return, especially considering everything we've had the last few years. But in the long haul, Bill, a bond fund provides immediate liquidity, right? Which is something we're going to talk about later in the show, which I think people don't pay enough attention to. Bonds in general, going back 100 years, have provided a little better return than certificates of deposit, a little bit better. And so I would really rather see people in stocks or bonds with a little bit in cash. But if you said, look, I want to put it in something, and today you still can, I didn't look at the numbers for the program, that's going to pay me that 4% a year for the next, I don't know, can you get a 1 or 2 year? I'll look it up during the break, and you want to put it in a CD, I have no problem with that, with renewing that. I think that's very reasonable. The federal money market now is paying somewhere around 4%. And all of these things could change and could change very quickly, right? Because you've got the indication from the Fed chief this week that, we're probably looking at a 1/4 point cut in September. And I think the betting now is for another cut sometime in 2025. And then next year, of course, no matter what happens, the president's going to get his person to be the head of the Federal Reserve. And that person is, I'm guessing, is just going to say, let's give a massive cut because that's what the president wants. That's the general take right now in the market. So yeah, I would determine my stock to bond ratio. I would have the right amount in stocks and bonds. And then if you wanted to have a little bit in CDs, just because you know it's there, just so you wake up every day and you can look at it, it's basically the same amount, then take that approach. That would be my way to do it. Let's see if we can squeeze in one more call here from Jim in Texas. Jim, welcome to Talking Real Money.
Thanks for taking my call, Tom. I've talked to you guys in the past and always enjoy the answers. I've got a question on closed-end funds. I've got 6 different funds that are in my mom's account. I'm trying to clean up this mess a little bit. They're all called Muni National Long Closed-End Funds. My question is there any trick to selling those and making sure that I don't get bit too hard on a bid-ask spread, or are they just as liquid as anything else?
Yeah, I think they're generally liquid. Of course, they don't issue any new shares, so that has something to do with the pricing of them. But you can sell those in secondary markets when available. So I don't. If I was cleaning up a portfolio, I would just clean it up. Like any security, because we don't know what the price will be. How big a part of the overall estate is this? Oh,
it's about 10%. She's got 6 different, the reason I want to get rid of them is they're all high expense ratios.
Yeah.
She's got 4 Invesco funds and 2 BlackRock funds, and the expense ratios are all 1.2 to 1.8, which seems way too high to me. Yeah, it's about $250,000 spread over those 6 funds.
Yeah, I mean, unless you're in a time machine and you're in 1975, that's an outrageous expense. That's, however many more times than you can buy, a municipal bond fund at Vanguard today, which is probably 0.15 or 0.2. I mean, cheap. And everything I know about fixed income says you pay less to somebody managing it, you end up with more. So yeah, I'd go ahead, find out what the prices be on those securities. And again, since they're a small of your part of your overall portfolio, get it done. 855-935-TALK. 855-935-8255. We'll be back talking real money.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
About you and your money situation. So give me a call. Don's out this week seeing his mom, which is great. Tom Cock here handling the duties. So easy as picking up a telephone. 855-935-TALK, 855-935-8255. And we go to Virginia, the state, to talk to. I couldn't quite hear the name, but.
This is Tom.
Tom for Tom. How are you? Easy to remember that one. How are you today?
Pretty good.
Good.
You've helped me before when I was pretty green in investing. I'm in Hampton, Virginia. And you helped me pick some funds in my Roth IRA, and they've been doing really great. So I'm looking to retire in less than 3 years, and wondering if maybe I should start moving into target date funds at Fidelity. I'm going to add more money into this account, $150 every 2 weeks. Right now, I have an aggressive portfolio, only in 20% in bonds. I've got 56% in ABGE, and in the VT, I've got 24%, and the rest in bonds. Now, you said before that in my Roth, I should have no bonds and have those other places, but that's not possible for me. So I found a target date fund, FSA&X at Fidelity. Would that be something that would be worth doing?
Okay, we're getting ahead of ourselves a little bit here, Tom. A couple of things. First of all, thank you for your kind comment about helping you in the past. If I was retiring in 3 years, first thing I would want to know is where is the money going to come from to pay myself in retirement? If the aforementioned pre-tax and post-tax accounts are going to be required to create income, I probably would have more bonds than 20%. So I think you're thinking there, but I would have a plan. I'd have a roadmap that says, here's about how much I'm going to need to draw from that portfolio. And here's why I need significant fixed income. Remembering that fixed income generally is the ballast, right? That's the calming part where stocks are doing, and you've seen it this year between April and August, the ups, the downs, the sideways, the, whirly whoops, all the things that make people crazy. They've done all those things. So, okay. But you raise also, go ahead.
Plan.
Okay.
Good. We do have a plan. It's just that, I've been aggressive with this Roth IRA, and then I also have a rollover IRA. Both of these funds have done really well, and I'm going to add more money to this. And I was just wondering if maybe I should put this money between ABGE and BT and forget the bonds for right now.
Yeah, the problem with that is if you need the money in 3 years and you're in an all-stock portfolor, you could see the portfolio could be down by...
I won't need the money in 3 years.
How soon?
I'm not planning on needing this money till for 5 years.
Well, but even 5. I mean, there are periods of time where stocks are underwater for 5. So you mentioned FSNAX. I was going to look that up. You said that's a target date fund. So the thing is, you may have a plan, but this portfolio doesn't seem to be fitting it, because if you're going to go use that money, I don't know why it keeps me. I'm trying to find the fund that you mentioned, FSNAX. I'm not able to do that right now on the fly. But
I told them finding a target date retirement fund, I could just move everything into it, and not mess with it.
Yeah, that might be the right approach.
Fidelity.
I'm sorry.
That's pretty hard with Fidelity. They don't make it easy for you to find something.
Oh, that I don't know, but I'll tell you this. In your instance, you may end up with bonds in your Roth IRA. It's not ideal, but it may happen because you need to have fixed income. Number two, for simplicity, I like target date funds. And so there's no reason at all that you couldn't own those and move on. So yeah, I think that's probably an okay approach. So thank you for your call, Tom. We wish you well. Make sure that all fits in your plan. 855-935-TALK is our telephone number. 855-935-8255. And you move right to the head of the list. I got things to talk about, but we'll come back and we'll talk more about the things you want to know about. So that's why we're here each and every week. And appreciate you being part of the program. We'll be back with more Talking Real Money.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Thank you for being part of Talking Real Money. We are live every Saturday here on Northwest News Radio. That becomes podcast. And, of course, we have additional podcasts where we do sort of enterprise stories and your calls, questions, that kind of thing. But for Saturday, you can call and be part of the show. Ask your question, get feedback, and I do want to kind of finish the book a little bit on the previous call we had from Tom in Virginia. Yeah, I'm a fan of target date funds. The key is picking the right one, right? Because it reflects somewhere around the year, you're going to be retiring. That's part one. And making sure that they're relatively inexpensive, because the options now you could get at Vanguard, for example, would be very inexpensive. So, I think that's a decent choice. Would I prefer kind of a balanced portfolio you mentioned before with the Avantis Global Equity Fund and a bond fund? Yeah, I probably would. But if you don't want to mess with the target date fund, we'll do it as well. So that was Virginia that call came from. We had one from Minnesota. We had a call from Texas. And now we go all the way to the Eastern Seaboard to talk to Gene from Maryland. How are those soft shell crabs doing today, Gene?
Not a fan of soft shell crabs.
No, I'm not either, actually. I had them once. I
love crabs, and I'm 77, but I've never been a fan of cleaning the crabs. Clean them for me and make a crab cake, and I'll eat them.
I have a brother that lives on Puget Sound, and for a very limited time each year, you can go out and actually collect the crabs, but, from the crab pots. But, and then he boils them right there and you eat them right out. It's pretty phenomenal. But you're right. I'd prefer to have somebody feed me all the crab rather than all the work, but that's the way it works sometimes. How can we help you today?
Okay. I called you and Don about 3 or 4 weeks ago, and I was the guy who only has about $50,000 between my wife and I coming in for Social Security. And no pensions, and the rest of our income comes from dividends and things like that, and in a way, capital gains. But in a way, the capital gains were killing me as far as my taxes, because most of my mutual fund investments are way back, before they had ETFs. So the problem I have now, I'll give it to round things off. One fund is, in one particular fund, $400,000. My basis is $200,000.
Yep.
So if I sell it to do anything, $200,000 capital gain right there.
That's right.
So one thing I decided to do, I don't need growth. I don't need a plan. I've already got a net worth of $8 million.
Yep.
I just want to cut out as much Uncle Sam as I can. I'm sorry. So one thing I decided to do, I want to know if this was a good idea. Instead of taking capital gains all the time and reinvesting them, I'm just taking them all in cash.
Yeah, you're going to pay the tax on them either way. That's not going to change anything. But yes.
Oh, I know that. I know that.
Yep.
But it kind of shuts off the growth, and I need the cash. I need about just this year, calendar year, estimated state and local taxes. I got to pay $110,000.
Yep. Sounds significant.
Mainly because but I've only got $50,000 coming in from Social Security. You see the headache I got?
Yeah, you got to create the cash somehow. So is that your question, sort of how to do it?
Yeah, well, the other thing was, I don't need all this money to live on the rest of my life. Is there any way I can bring my children, adult children, in on some of the mutual funds, or to not gift them, but in kind transfer to them without triggering a capital gain?
Well, we're gonna go into a break here, Gene. We'll come back, spend a little more time talking about that. And if you've got a question, give us a call, 855-935-TALK. That's 855-935-8255 as we continue talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to Talking Real Money. Happy to take your calls now about anything financially related. I'm Tom Cock. Don McDonald's got the day off, and the phone works. 855-935-TALK. 855-935-8255. We're talking with Gene in Maryland, who has a significant estate. He's trying to pay his fair share of taxes, but not anymore. And I want to make sure I'm clear on this, Gene. You're looking for ways potentially to give away some of your shares of these mutual funds and not pay tax when you do that. Is that what I'm hearing?
Well, yes. One of the reasons why I've never touched these funds or switched, played roulette with them or anything was I figured, well, if I kept them long enough and I die, they get a big step up in value.
That's right. Yeah.
Is that the only way my kids can have the money in any way, shape, or form is if I die?
Yeah. I mean, here's the thing: you can give it. You could give them to. You could give each child $19,000 from you and $19,000 from your wife if you're married. That's $38,000. Right. But the cost basis of those shares remains the cost basis that you purchased them for. So it doesn't change. So as an estate planning method, and by the way, don't quote me on all this because I'm not a tax guy, but as I understand it, that would not fix the overall tax situation, because the smarter play, as you just said, would be just, if you don't need the money, just hold on to them. Now, here's another thing to think about. Did you say these are in mutual funds?
Yes.
Yeah. I mean, there's been a lot in the mutual fund industry. There's been cases now. Vanguard's done it. I believe Dimensional Funds has done it, and others are in the process of doing it, where they've been allowed to take mutual fund shares, turn them into exchange traded funds, and not have a capital gain tax, paid, even though the shares are now held in ETFs, and what happens inside there is not going to be taxed as capital gains as it would be in a mutual fund. So there may be reason to hang on.
Don recommended when I called before, and most of this stuff is with T. Rowe Price. I called them. No, they're not doing it yet.
Oh, they're not doing it yet. Okay, there's the yet, because here's the thing.
I don't know. Yeah. No, I called 3 different times. I got 3 kind of different answers. One is we'll probably be getting into it. One, we're not doing it. And one didn't know what I was talking about.
Yeah. I mean, here's the thing, though. The tide, the tsunami that is exchange traded funds right now, all these people that are that own mutual fund companies, if they don't do something, you even saw Ron Barron do it recently, who has been a mutual fund guy forever, and he finally said, all right, we'll have an ETF, because all the money is going, part one, from mutual funds into ETFs. Part two, any new money's coming in is going into ETFs. So if you're a financial operator that way and you don't have exchange traded funds to offer, you're going to be the last guy making a buggy whip, because you may have 100% of the buggy whip market, but nobody's, using horses. They're using cars. So I would, if it was my money, I would hang on and just wait it out, because if you don't need the cash and you're trying to do the best thing for your estate planning, I don't see a whole lot of other options.
I don't either. That's why I called you.
Well, and by the way, if it's really that bad and they don't want to pay the capital gains tax, I will off the air give you my account numbers. You can transfer it. No, kidding. No, you can't do that. So, because I'm going to pay that same capital gains they are. But, and the only other option, frankly, and Gene, thank you for your call and thank you for your listening to us on a regular basis, would be to be charitable. I think we mentioned that before, because you can give those appreciated shares to charities. They pay no tax on it. And it could work out well that way. So, all right, let's switch up a little bit here and head from Maryland to Bellingham and talk to Bernadette. Bernadette, welcome to Talking Real Money.
Hi, thank you so much. Yes, I just have a question. I have an annuity with USAA that isn't paying very much, and I wondered if you could give me any information about moving it out or anything.
Well, okay, so how big a part of it is of your estate or your savings?
Well, it's mine. It's probably 50%.
50%. Okay. And has it been annuitized? Are you already getting income from the annuity?
No. Oh, I just take my RDM at the end of the year from it. I don't touch it.
Our required minimum distribution. So, the short answer is yes. The longer answer is it can be complicated and somewhat confusing because you can do exchanges where you could take an expensive annuity, and I don't really want to get into what kind of an annuity it is from USAA, because unless, by the way, it was an immediate annuity of some kind, I'm not going to favor it because pretty much everything else is expensive. It has surrenders. It's illiquid. It had a big commission. All the things I don't like about this industry, it incorporates. So here's what I would do if it was my money. I would talk to a fee-only 100% fiduciary advisor and say, I have this product. Is there any way out of it? I don't like it. I don't need the income from the annuity. Is there any way to, as I said, transfer? They do 1035, I believe, exchanges where you could take that and move it to another annuity, which would be far cheaper, but wouldn't have some of these other bad things associated with it. But to do this over the air would be somewhat complicated because it does require a fairly in-depth look at all that.
Okay. Yeah. Biggest mistake of my life, actually.
I'm sorry for that. Yeah, no, and this is one of the things, by the way, and thank you for your call, Bernadette. I mean, this is one of the things we hear often about annuities is sure seemed like a great idea when I signed up for it because I'm going to make this much every year and it's going to pay me this many millions on all, et cetera, et cetera. And then we run into the other end of the equation where people say, gosh, it just was not a good decision. So, but I would go get professional help, as I said, from a 100% fiduciary advisor, period. End of story. I would not talk to anybody else because here's what's likely to happen, sadly, is somebody else will sell you into a different product, which you don't want to get into either. So, but there's ways to work your way around that. So we started the hour a little bit talking about the things I learned from my clients last week. I promised to talk a little bit about how you can, if you're doing it on your own, how you can put money in your place. And that would go like this. Number one, creating your financial plan. If you're close to retirement, how you're going to pay for it, right? And building the correct portfolio. Number two, not looking that often at your portfolio because we find the people that check it every day. And I'm sure many people woke up today and said, wow, look at that market yesterday. I want to see how much money I made. And number three, tuning out the noise because every day there is always a list of bad things that are going to happen and a list of good things that are going to happen. Got to figure out how to ignore all that stuff and get on with your plan. We'll continue talking real money in just a moment.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Thanks for being part of Talking Real Money. As I said, we're here every Saturday. And yes, we will be here next Saturday as well. We know it's a holiday weekend. Don will be back from his visit with his mom. I will be here and we'll be talking money. So join us for that. Couple other things, other ways we can help you. You know, we built the firm that we're part of. We built all of the work that we've done with the podcasts and the events and Retire Meet and all that stuff with the idea that, that you understand more of this. Too many of us just say, oh, I got an advisor. Somebody else handles all that, which is if I'm your advisor, I feel great about that because what a level of trust you've handed that over. But I think most people need some basics. And so we have worked hard on this show, this podcast, the events, as I said, whether it's Retire Meet or other, we do all kinds of online stuff as well, or talking to you one-on-one to make sure that you're doing the right things to pull yourself forward in the future. So how do you get help from us? Pretty basic, really. We have a website. It's called TalkingRealMoney.com. I know that won't surprise you because the name of the show is Talking Real Money. By the way, Don put the website together and handles it all and regularly teases me because I don't go there much. But I did today because I knew I was on the hook for doing the show by myself. So there's a couple ways to get help from there. One would be clicking on the button that says Meet an Advisor. Now, this is where you can ask to have a one-on-one chat with an advisor. We do a couple of things that I don't think very many people do. Part one is we'll take your portfolio, all the various accounts, IRAs, 401k, all that stuff, and we analyze it for you, absolutely free, no obligation. We have a program that will tell you how diversified you are, how much risk you're taking, how much you're paying others. It gets into minutia of a great granular, what type of sectors you own, all that kind of stuff. So it really gets into the items that we think you need. So again, then, by the way, we're glad to have a chat with you about your overall plan. We don't do plans for free because that really gets expensive, but we'll do this analysis. You can chat with an advisor, and here's the more exciting part, I think. I'll do them with you too. People are always like, wait, Tom from the radio? Yeah, sure, absolutely, 110%. I love doing that. And I'm just the regular guy next door that lucky enough to do a show with Don McDonald. So again, that would be going to talkingrealmoney.com, clicking on Meet an Advisor. And we're getting ready to head into the fall. Maybe it's a good time to have that review. Part two is either calling this program, as some of you have done today, at 855-935-TALK, and we'll take calls again after the top of the hour, 855-935-8255. But you can go to the website, the aforementioned talkingrealmoney.com, and you can click on Contact Us. Now, that will allow you to either type a question. We get a lot of type questions. I have some here in case we don't get calls. We're glad to answer those, and we do those either on the show or on our podcast. Sometimes Roxy, one of our advisors, joins us to answer some of those, but we do get to them. I've got a lot of them, but we always answer the questions. We answer them in order, and we don't edit any. Whatever you ask, you ask. But you could also there record a question. Don every Friday does what I think is my favorite podcast of the week, where he takes your recorded questions and responds to them. It's kind of fun, but those are ways you can directly ask us for things like that. And again, no obligation, no cost. We're glad to help you in any absolutely way we can do this, because we know the better off you're educated about all this stuff, the more likely you are to be successful. The more likely you're to be successful, frankly, the better all we are, because you can take care of yourself, and we won't have to figure out as a society how to take care of you. So take advantage of all those things. We want you to be very, very good with your money. We want you to put money in its place and not make it a big part of your life. So again, we'll be back with more at 855-935-TALK, 855-935-8255, Talking Real Money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.